let's get right into it. So the presentation today we have is accredited investor versus non-accredited investor. So I saw some new people here. So we as a syndication model, basically what we do is you go and buy a piece of property, which is apartments. That's what we're shooting for. And then like we as Kerry and I, we are general partners. So we go like find a property, negotiate the price, run the apartment, everything. We can get the investor alongside with us, and then we pull our capital together and then buy that property together. Of course, the investor is all passive. They get a capital, and then we take care of the work. So the day-to-day operation, we're gonna do it, and then the investor is the one that will have kind of waterfall. So basically, we pay the investor first, and then whatever left is us. So that gives the investor a peace of mind because like they know that we're gonna have work harder, so we can get paid too. So, but basically, I want to talk about there's two types of investor that can be in a deal. One is accredited investor, and then another one is just non-accredited investor. And then the reason we want to do this topic because I know deal is important. Like of course you need to look at the deal, make sure that in a good location, make it work. But you also need to know about you as well, because if you can fit that deal, or if you are eligible to kind of get into that deal. So just a little disclaimer: this is just for informational purpose only. That we're not any like financial advisor or anything like that. Please consult your OCPA, attorney, etc. Okay. So yeah, so you want to know who are you? There's a Chinese empire. He's saying that know your enemy, and you know your enemy, know yourself, and then you can fight 100 battles without disaster. So yes, know your investment, know yourself, and then if not, then you should be okay. So investor, accredited investor and non-accredited investor, like I mentioned earlier. So what is accredited investor? So to qualify as accredited investor, you have to have a annual income of $200,000 by yourself, or a joint income of $300 with your spouse. And then you have to have that for at least 2 years to be qualified as an accredited investor. And then to get into like what benefit and like pro and con, we're gonna get to that later. But either that, or you have to have a net worth of $1 million, and that without your primary residence. And then the third one is a little bit tricky one, because that one is that you have to like take a test, and then basically you try to be a financial advisor to become that. So, but that we can talk about another day, because that's another topic. So if you are a credit investor, so one of the kind of like the downside, not downside, but a credit investor, you can invest into any deal that you want. So and then, but to be determined as a credit investor, I split out those two. We also have a accreditation verification process. So this is kind of a process you need to prove that you are accredited. There are two ways you can do it. There we have a very simple form. Your CPAs or your attorney they know you, so they can just like check up on it. Or there's like two websites, verifyinvestor.com and parallelmarket.com. There's a small fee. You just go in there, and then they ask you like a bunch of information. Then you give them approve, and then they basically kind of like provide you a little certificate and saying that you are eligible for that investment type. And then, so what is non-accredited investor? Basically, it's very simple. It's just if you are not accredited, then you're not accredited. So that's just it. So you don't met those qualifications, then you just not, like you fall into a non-accredited investor. So what are the difference between those two? So it's important to know what type of investor you are, because every investment out there is a two type of investment, or two type of exemption. I'm sorry. One is 506B and one is 506C. So let me back up a little bit. So I talked earlier that we are investment companies. So just like others, stock bond is regulated by an SEC. So this one is not like, we're not like open public like stock or anything like that. We can like a little bit of private placement offering. So there's an exemption where we can kind of like provide that exception to our investor, provide the offering to our investor, but it has to be under this regulation. So regulation D506B means that a company can collect, like capital from investor, but it has to be, sorry, 56B mean that another credit investor, like people who do not qualify as credit investor, can invest in. So basically, but the downfall into that is that it can only limit, it have a limit of how many non-accredited investors can be in there. So it's up to 35 non-accredited investors. So that is kind of the pro or the con of non-accredited investor, because you only can get into, there's only a limit of how many you can get into. And 56C is where it's more diverse. Basically, 56B, C, you can just, or we can just like advertise to anybody that we want to, but it has to be only a credit investor. So, and then the reason is have all this regulation because it's want to make sure that the SEC want to make sure that they can protect the investor. It's not that we can just go outside and then grab someone out the street and be like, hey, you want to invest? You cannot do that. You really don't want to like take the last, like 5, 10,000 or 20,000 of someone else that they have, and they need that for their bank savings account. So this regulation is in place, so then it's protect the investor itself. So that's why I want to talk about this. So then, if you know that you are either a credit investor or non-accredited investor, so you can, like get to the deal more appropriately, basically. So the pro and cons, like I mentioned earlier. So basically, the accredited investor, you can get into any deal that you want. So if you, scroll through Facebook and you saw like, oh, there's investment opportunity, then you can just, like go in there, call them up and be like, hey, I want to be in that deal. Or someone else, you can just go in there and then call and then just get into any deal that you want. And then you don't have to, but the only thing about that is that you have to go through a verification process. So a credit investor, you have to go to a verification process, and also, but you can get to any deal that you want. Now, not a credit investor, you cannot just get into any deal that's out there. And the reason is, let's go back to this 56B and 56C. So for example, when I have a deal, okay, I can have two ways I can do. I can either choose to do a 56B, where I just only collect non-accredited investor. Now, a credit investor can also get into 56B, but I cannot publicly advertise that to every single one. So if I choose, let's say I have a deal tomorrow, and I choose to do 56B, I cannot just go outside and post that on my social media, because 56B allow non-accredited investor in there. So that way I can only share that with the people that I know. So does that make sense? And then if I do 56C, I can I can go on social media tomorrow and blast this out, saying that, hey, I have this deal, it's 100 units, like return is this, that, and then everybody who wants to join, they can come to me and join. But the only catch is I can only take in a credit investor. So not a credit investor cannot get into an advertised deal, but only a credit investor can get into those deals. So that's a big difference. So for a pros on not a credit investor, you don't have to go to a verification process. If you know the operators, you can just get into a deal. So you don't have to go to a lot of loop to prove that your net worth, to prove your income to go into a deal. You can just go to that deal, but you have to know the operator before you get into a deal. So to summarize up, two types of investor. One is a credit investor, where you have to go to a verification process to make sure you are accredited. And then if you are accredited, then you can just invest into any deal that you want, even though if it's unadvertised or advertised, anybody, you don't have to know the operators or the one that like operate the properties. But again, you have to like go through the process. And again, on the 506C, where only accredited investor can go to, you can take unlimited amount of investor. You can raise as much as you want, or the like as much investor in there as possible, but it has to be all accredited. Now the pro and con for non-accredited investor, which is anybody who is not accredited, you have, I mean, the good side is that you don't have to go through that process, but the bad side is that you have to know the operator before you get into a deal. So if that operators, like advertise a deal and then it's become 560, you could not get in there. However, there's a little catch at the end. I want to say that there's a way you can get into an advertised deal, but I won't get to that later. But the con, also another downside of non-accredited investor is that there's only one investment can only have up to 35 investor. So like for example, it's a good deal. You know the operator, you get in there, but they already have 35 non-accredited investors in there, so you cannot add a 36 in there. The maximum number of non-accredited investors in a deal is 35 for a 506B deals. So how can investor invest more into a deal? So like I said earlier, if if you are a accredited investor and you know you are, then you're good. If we have a deal, you can just go ahead and come in. You just have to go through that verification process. It sounds like a lot, but when you go through one, it's easier because then your CPAs already know that you are. Next time they just gonna check that mark and go. Or if you already went to that website, then you know like what you need to get that proof. So that's good. But if you are not a accredited investor, which is you do not qualify for those guidelines, then how can you get into a good deal? So I said earlier, non-accredited investor cannot get into a deal when it's become advertised, because when it's advertised, it becomes under regulation, the 506C deal. But recently, the SEC allows an operator to make it into a 506B first, and then after a certain period of time, we can turn that into a 506C. So what it means is that when I have a deal, I can come to my non-accredited investor first and then show them all this deal. And then say that like, hey, I have this deal right here. It's not advertised yet, so it's still under 506C regulation. So I can talk to every one of them, and then, but I have to have a certain window to get there, because I have to close that window and open a 506C. Because when you move to 506C, that 506B window, it will be closed down. So I cannot take any more non-accredited investor when that time ends. Does that make sense? So again, yeah. Yeah, sure. Go ahead.
How does the operator become qualified to raise the money? What process do you go through as the operator to be in the position to raise money from accredited investors?
That's a great question. I mean, as when we are in a GP team, we already, so that we have to follow a guideline. That's why we have this guideline here to make sure that we raise the right investor to the right deal. So there's not really any, like.
So if Saudi had a project he was going to do and he wanted to raise $5 million from accredited investors,
right?
He doesn't need to go get some type of certification in order to do that.
No, he doesn't. But he has to be on a deal. So he cannot raise that for someone else. So for example, yeah, you have to be a GP in the deal too, because the GP itself, we can also invest our own capital into the deal. So but we don't have to be an accredited investor because we are within the deals. And like I say, this regulation is really to protect the investor, because you really don't, because someone, can be like, go to grandma, grandpa, and then take the last 50,000 on their bank account. And basically, SEC don't want to do that. They want the operators to know the investor first and then know their financial situation before we can do it. Basically, it has to be educated. So.
And then off of his question, GPs and operators, they don't have to have a single penny in the deal. It could just be all investor money that they're.
Yes, so that is possible. They don't have to be. However, when we raise a deal, before we raise a deal, we have to go through our lawyer, make sure we set up a PPM, private placement memorandum. So that upfront fee, the operator have to take out of their own pocket. And of course, when you get into the deal, you have to pay earnest money and all stuff like that. So those earnest money is still out of the GP side. And then at the end, we raise it and then we can split those. But yes, we have the upfront fee, and then a lot of operator also invest our money too, especially us. That's why we call KNN capital partners, because we are not working. Investors not gonna work for us. We don't work for them. We become partners. But great question there.
I actually want to ask into your question too. I think it's one of the things that you want to know is that is there any certificate that us have to go through in order to raise the money? It's actually come from the investor. When they look at the operator, they be able to, first of all, they can vet the deal by doing their own due diligence, and then they also can vet the operator too by, you can look at or set up a call with them, talk to them, see how many cycles have they been done, how many deals have been done, are they in the market that you are interested in? So I think that's really much like the investor vets the operator, and then the operator, of course, have some type of if you are a credit investor, we have to vet you to prove that you're an investor too.
Now, like kind of picking off of that, there is a certification. Now, it's not here. If you raise a deal for someone else and you're not a part of the operating team, then you do need a certification for that. It's called dealer broker certification. So you raise that money for someone. So you raise that money from that investor for someone else, and you're not a part of that. So there is a dealer broker certification on that. But we raise a deal. We're gonna be on the deal too. We're gonna run the property. Yeah. Nope. So again, good deal. So like I say, we can open up 506B, close that, get our non-accredited investor in, and then we can always open it back up to a 506C where we can get advertise a deal, get everybody involved. But when we open a 506C, then non-accredited investor cannot come in anymore. So that's why when we have a deal, we always have the short amount of time to invest through our non-accredited investor. And then like I said earlier, to be a non-accredited investor and then to participate in the deal, you have to know the operators. So, that's why if you don't know us already, talk to us. Just we have a little Calendly there on the end, scan it, talk to me, and then, that way, whenever we have something going on, you will be the first one that we go through if you are non-accredited, because legally we are required to talk to you and know, can I know you and your financial situation before, we can do it. We can just get someone to do it. Let's try something here. If you get your phone out and scan that, it actually will take you to our website. So 3 ways for you can get a good deals. One is connection, right? So, connect with us, scan that, and then.
Actually, a link to our Calendly, so you'll be able to set up a call with us through that QR code.
Oh yeah, yep. You scan that QR code, get straight to Carrie Calendly, have a talk with her. It's gonna be Zoom, 30 minutes. We can talk about anything you want. But connection is one of the things, and then of course you need to have knowledge. So we send out email every week, and then once a month we have articles about about the market, about what syndication is, and then we also have an article about non-accredited and accredited investor like we talked about today, but it's just in an article. Maybe it's easier. So you scan that, it takes us straight to your website, and then you can have that. And don't worry about this now. We're gonna send out a recording where you can just go online and then go there later. Last but not least, you need experience. So that web call will bring you to here, our meetup. So it's gonna be first Saturday of every month. So this is this place and 2 to 4. So again, thank you so much for everybody coming today. I appreciate your time.